Here's an interesting situation. Gold is rallying decently in the first few days of the new year. However, according to Bank of America Merrill Lynch, gold had its 8th straight week of outflows, the longest such outflow streak in 3 years. How do you jibe the two? Let's find out. Eddy Elfenbein with Crossing Wall Street blog and Stacey Gilbert of Susquehanna are your guests today. And Stacey, I guess I'm just not that bright because I can't figure out why there's so many outflows, but yet the price of gold has gone up. It doesn't make sense to me. Does it to you?
It does. I mean, if we put into context what actually was happening with gold, so let's just put it into the ETF context because it's a little bit easier to track. ETFs had about 16 billion of inflows into gold-related long unlevered ETFs right up until the election. I mean, that was a decent amount, and gold wasn't really ripping during that time, but a lot of this was used as a hedge where you had an environment where everything was monetarily driven. You had something like 27% of all sovereign debt was yielding negative rates. I mean, it was just an environment where gold was really that safe haven that investors felt most comfortable with. Now let's kind of switch post-election. Things have changed. You've had about somewhere between 6 to 7 billion come out from these same ETFs. So there is still money in the ETFs. We've still net for 2016 did see money going into gold. It's just that investors started to reallocate as the world shifted from a monetary stimulus to a fiscal stimulus. That I don't think is necessarily a bad thing. And it's 6 billion of gold over just about 2 months. I mean, that's not going to bring gold down substantially. It is kind of smaller outflows that have come out relative to what went into it, which is why I think you can have the price rising as money's coming out. But I do think the money just got reallocated to areas that are likely to work with fiscal stimulus. If you think about how much money went into U.S. domestic ETFs, since the election, you have almost $90 billion moving into domestic ETF. I mean, this is substantial amounts of money. So I don't think it's that investors are wrong. I think investors said, I only have so much capital. I thought that this was a monetary stimulus type of environment. That has shifted. The Treasury curve has corrected itself. Now let me allocate elsewhere. But nobody has dumped it all completely from their portfolios.
Wow. I feel, what was that commercial? You've got questions, we've got answers. I feel like I had the question, you had the answer.
Well,
Eddy, what's your take on gold? Do you agree with what Stacey had to say?
Absolutely. I think Stacey's right that a lot of what we're seeing, it's sort of the echo effect of a lot of the trends in place going up to the election, people particularly in currencies in China and the euro kind of running out of areas to play, so gold by default becomes a nice risk play, and then we see that get unwound. Still, I think the broader picture for gold is pretty bleak, and I think investors would be wise to stay away from gold. Remember, gold really it's the opposite end of real short-term interest rates. So the bigger the spread, the higher short-term, real short-term yields go, the worse it is for gold. And I think, we're looking at the Fed's plans. You remember Moses Malone had the 444. Now the Fed has their 333 to raise interest rates 3 times this year, next year, and the year after that. Every one of those rate increases will take a big bite out of gold. So I think for now, investors are best to stay away from gold.
Okay, stay away from. I prefer Mike Tyson's quote. Everybody's got a plan until they get punched in the face, right? Which maybe the Fed will do the punching. We'll see. Eddy and Stacey, thank you both very much. Great stuff. Appreciate it, folks. Thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.